So what's going on, guys? What I'm going to show you really quickly is how to set the perfect stop loss. Now, there's no such thing as one stop loss fits all. Let's talk about it. Now, I have not entered the market. This was market open, 9:30. I enter or I begin trading after 9:45. As you can see, I have somewhat of a placeholder, right? A little transparent segment here that lets me know when I can start trading. Now, of course, the argument would be, well, you left all this money out on the table, and I sure did, right? If I go ahead and expand on this, this was a potential 9.5, 10 to 1 trade. But the point of this video is to show you how to set the perfect stop loss because what a lot of traders do is they essentially say, okay, well, I broke this level, so if I break a level, I'm going to set my stop there, right? Upon the break of a level, I'll set my stop there. Now, how many times have you been stopped out? Now, this might be a horrible example, right? Because this actually worked out. But how many times have you been stopped out at a level? Or how many times you've set your stop too short, you get stopped out, and then the trade runs off, right? And you're like, what the hell? Why didn't I get back in? Or why did I set such a tight stop? So I'm going to give you best practice on how to set a stop. Now, to be able to understand this, we have to go on over to indicators. We're going to type in ATR. Now, that is average true range. Okay, so from market open, we could see that the average true range has risen all the way up to 20 points. Now, I'm trading NQ. Now, why is this important? Because this is 20 points and ES. Well, it's only 3.36, right? So again, this just proves that one stop is pretty much not universal, right? Because 3 points on ES would essentially be 12 ticks, whereas 20 points on NQ, well, that's going to be 80 ticks, right? So you need to know basically the average move, okay? And so we could see that here with ATR. Now we have a move down. This is a really large candle, very aggressive candle. And if I were to set a stop, should I enter here? I would enter, let's say, at a break at the level, and my stop will be 3.63 points. So at the level, we have 6.336, and then we add 3.63 points. Let's just say 4 points. And that brings us at about right here, 6.340. So a lot of traders like to go ahead and use a multiplier of 1 ATR, right? So we round this up and we saw that the ATR currently is 4 points. So we use a multiplier of 1. Should we enter here on this level, our stop would be at 63.40. Okay. Now, if we use a multiplier, if we use a multiplier of 1.5, then our stop becomes 6 points. Okay. And this is really important because stops are based on volatility. It is not based on a fixed number or boxing in price action. And if we look at CL, what would be the average true range, or basically the range of the candle? And for CL, that's 0.17 points, right? So you would go ahead and calculate how many ticks that is and basically just plot that difference here. And that is your stop, right? So we have, if we entered here at 6542, 17, let's just say 20 points to get us down to 6522. That will be our stop, 6522 at or about, right? Or 25. This would be our stop. This allows the trade room to breathe, right? Now, I have an internal here, right? This is my DSR settings. This is a master internal indicator of which I play with. And we play with the multipliers and we play with the risk scales to plot the best stop. So we go ahead and we see the ATR 17, 17 points. Let's go ahead and measure this. This is going to be 20 points, right? At the moment in time here, when the trade design printed, that was 12 on the ATR. We gave it a little bit more, a 1.5, and That's how we created our stop, give us enough buffer, again, based on the volatility, the average true range. Now, how does this work in practice? Well, it's time for me to make a trade. All my roles have been pretty much I have confluence. I have, moved to the downside. I need to zoom out. See, we broke all kinds of levels. There's a level right here. We see that there. And what I'm going to do is wait for somewhat of a retracement, see if we could get a better fill. I hit 16 contract sales for minis. But I'm going to go ahead and hit the sell button. Now, really quickly hitting the sell button, we were up. This is my level right here. Now, I can use this as a mental stop, right? Because the trade has progressed so far out. Now we're zooming on in and we see, hey, up 730 bucks. Where would I break even? Well, break even would be essentially maybe 1.5 times the ATR, right? That way your break even point is giving the trade enough time or enough room to develop without stopping you out. Okay. Now, what we have here is a DSR range, which is giving us somewhat of a cheat sheet here, right? Like based on where the candle is, this is where your stop should be. And it trails. Okay. This is exclusively at trade 1348, right? We make it very, very, very simple for traders to know where their stop is, where to place their stop relative to an entry. Now, how many points is this? Well, it tells you 27 points you need to give it, right? Which coincides with basically what our current ATR is, which is 27.32. Okay, nice and tight. You see what we're doing here? So I'm up 1,700 bucks, guys. This is the end of my video. I made my money, you know, I love YouTube, right? I get to teach you something, but then make money and do something I love. For me, that is so awesome, right? It really is a fulfilling life. Plus, YouTube doesn't really pay bills because I don't really get many views yet. And that's up to you. Make sure you hit the like, subscribe button, guys. This is how you set the perfect stop. Use the ATR indicator, then use a multiplier of that value. Again, recap, ATR. What's the you want to go a very if you want, especially in a high risk maneuver like this, because the trade has extended itself. I'll go ahead and close this trade right now. But if the trade is overextended and you want to be conservative, you use a multiplier of 1 of the ATR. If if you are just starting the trade, right, at trade origin, see we signal an entry here, although that was before 9:45, maybe you want to give it a little bit more room, right? And as you can see here, when the trade design prints, it already accounts for that ATR, thus giving you the best stop off the rip, off the rip. Trade design prints, this is where your stop's going to be. It's based on basically just sound professional trading practices. Again, one size doesn't not fit all. And that is why when you go ahead and look at your stats, you may have a high win rate, but your risk reward is completely off. Why? Because your trade thesis isn't based off the proper metric or initial metric, which was ATR. You're just basing it off like pips and ticks and all that nonsense, right? And then you find yourself just getting stopped up, stopped out, stopped out, stopped out. Death by 1,000 cuts. Is that you? Yeah, leave a comment down below.